how I caught 3 black swans this year, a detailed breakdown of the trades, conclusions on what can be improved, and a summary of the public Bitcoin options experiment, as well as some thoughts on the market and plans for the future. Hello friends, this is the Option Economic channel. I'm your host, Roman Veselovsky, and today we will summarize the experiment that I started in January of this year. I was curious if I could earn more than 30% per annum on Bitcoin options using my strategy. And today we can say that this experiment has come to an end. What happened? First of all, that very super trade took place. Remember, I have said repeatedly that there hasn't been a trade with a strong Bitcoin rally for a very long time. And so last week, that very rally happened when Bitcoin grew by more than 20% in a week. And it turns out that such a week hadn't occurred for 128 weeks. And what's interesting is that I managed to buy the options for $30, and these options were worth $9,000 at their peak. I, of course, exited much earlier. That is, the very last trade I closed was at $4,500, but in the end, they grew up to $9,000. So, at one point, they were giving 300 times returns. So even if just one such trade happens, if you calculate it, we have 52 or maybe 54 weeks in a year. So 300 times returns covers us for about 5 years. And accordingly, if at least one such trade happens once every 5 years, that would already be enough for the strategy not to be unprofitable. But naturally, if we look at this figure of 128 weeks, well, the chances that there are many people who will be able to wait 128 weeks without such a move, well, they are not very high. But fortunately, if we look, for example, at making 12%, here it would already be 68 weeks maximum. And those 68 weeks actually ended just last week. So it turns out that for almost a whole year before this, or rather, not almost a whole year, but more than a year, the market didn't move. And last week, a situation occurred that was practically a mirror image of what had happened before, back in 2025. And in 2025, we had the opposite situation, where people got caught in a long squeeze, and now the same thing has happened to the short sellers. So, as far as I understand, there were liquidations in the range of 3 billion or maybe even more. And you can see that the option week closed up 21%, and it reached a maximum of as much as 21.83. So before this, the last week like this was, let's see when something similar happened, all the way back on February 26th, 2024. So a week of this same scale, it turns out, was 2 years ago. Actually, even more, 2.5 years ago. And besides this trade, I only had 3 profitable trades in total. So I closed this trade and I calculated that with a risk of 1,000, I earned approximately 26. So this trade brought me 26 times my risk. The previous trade was, it turns out, at the beginning of June on a short position. Back then, I bought options at 115. The risk, if I'm not mistaken, let's see, what was the risk there? The risk was somewhere around $1,000. Also, by the way, yes, the risk was also somewhere around $1,000. Or maybe actually even less. So I had 69 puts back then. Ah, yes. And accordingly, there were, let's see, how many options did I have then? 10 at 60 and 115. So back then, the risk was higher. I had already increased the risk significantly, and the risk there was about 1.7%. And accordingly, in that trade, I managed to take 34 for 1,700. So that, it turns out, was 20 times the return. And accordingly, there was another trade in February. In February, the volume was much smaller there. In February, by the way, the return in terms of multiples probably turned out to be a bit higher. So I bought options back then for about $290. Well, and by the way, that was a very interesting trade. I was only buying put options back then. I only bought a few call options a little bit later. And so the total risk on the trade at that time was, I was closing these options here. Wait, no, hold on. Just a second. It was definitely in February. Where is it? Where is that trade? Okay. Oh no, yes, here is that trade. I just bought some more calls a little later. And then accordingly, I closed the trade at around 11,000 with a risk, if I'm not mistaken, the risk was approximately, let's see, here we had about 2.7 options. And in total, they cost, by the way, yes, it turns out the options were more expensive back then. 2.7 options, that is $530, somewhere around 1,600 as well. So, well, the profit here wasn't that big because I had to chase the market, and I accordingly bought quite expensive put options, that is $290, and they grew to their maximum. It turns out the market reached a maximum of 60 there. So they could have given roughly, well, 35 times the return at the maximum. So it wasn't such a strong trade, but it was still very interesting nonetheless. And here actually, it should be noted that it turns out I bought them on Friday. I didn't wait like I usually wait for Saturday or Sunday because the market started moving down at that moment. And if I had actually bought these options after Saturday happened, then on Saturday, for example, I could have bought them for about $90 or so. So much cheaper. And the first conclusion that can be drawn from the trades I made this year is that in 90% of cases, a black swan can be bought cheaply. That is, it's a situation that in fact is not really expected. And it turns out that this first trade, the trade in June, and the trade that happened last week, notice how cheap the options were that you could buy at that moment. I mean, from 100 to 300 times the return. So this, of course, is an absolutely super trade on the 67 calls. That is, it reached a maximum of 300 times the return. And the second conclusion that can be drawn is that if we look at the chart of Bitcoin itself, it turns out that in this trade, I exited at an average of 2,600. So it turns out that if we just take this first candle, it reached somewhere around 69,700. And in essence, I exited at the very beginning of the rise. Why? Because I was very worried that the market might pull back. And since the options had already given a good profit at that moment, I closed almost 60% here and closed the rest at a maximum of 4,500. So it turns out 4,500 is approximately 71,500 for Bitcoin. So right here, so it's clear that I didn't even catch half of this move. If we look at another trade that was in June, so if we switch, it turns out to June. Okay, let's go ahead and open up the calendar to June 2nd. Moving on. And right here, accordingly, was the second trade. So here it's also clear that, first of all, the movement only started from Monday, meaning it was stuck in a sideways trend until Monday. So back then it was possible to buy options even cheaper than I did. And then I closed the options at an average price of somewhere around 66. So I closed them somewhere around here. It turns out the start was here, and my options were, if I'm not mistaken, the 69s. So I made about 3,000 on them. But at the same time, notice that the low was, here it was for us, it turns out, on Thursday. That was $61,370. So in essence, I also could have closed at twice the price at that moment. So I also exited the second trade quite early. And the third trade, it was in February. Let's take a look at that one too. That was back on February 2nd, I believe. Yes, it was right at the very beginning of February. Yes, here it is. And here is that very trade I was talking about, where because the movement started, it turns out on Thursday, January 29th, I got scared that, well, we had broken out of this long corridor we had been in, and there was an acceleration right here. And so I decided not to wait for it to break through the corridor. That is, I thought the movement might start as early as Friday, and accordingly, I bought the options a bit earlier. I had, it turns out, the 74 put options, that is, at this level. And here too, that is, at the moment, the market surged almost right at the beginning. That is, on Saturday, it almost immediately reached 74 and then stayed there until Thursday. And then it turns out that when I had only 1 day left until the options expiration, it crashed in literally 1 day. And pay attention, it reached, it turns out, down to a minimum of 60,000. And then I exited the trade at an average price somewhere around the 70,500 area. So I closed the option with about 3,500, and then it went on to drop another 10 at one point. So the main takeaway that can be made, for example, from this year is that at the very least, a large chunk of an option position, well, maybe not large, but at least 30%, it makes sense to hold until the very end, that is, until the very end or until expiration, or to hold it well until some truly astronomical values. So, for example, in the last trade, I described everything, saying that the market should move more than 12%. At the same time, it turns out that I closed around 69,600. And well, exactly. So if you take 12% from 63, I accordingly moved to 669, and 2%, that is 70,200. So even taking into account my minimum target, that it should have broken through 12%, I exited earlier by about $600. And actually, because I had to wait a lot this year, I mean, I waited 4 months for the second swan and another 2.5 months for the third swan, I got a little tired. And so when the profit from the last swan came in, I didn't want to stay in the position for long. Especially since I also had some Ethereum options, which I didn't really talk about much. I mean, in our experiment, we mainly had Bitcoin options. And it turns out that at that moment, I was so burnt out from all this waiting that I just didn't want to stay in the position any longer, so I closed it completely and didn't wait it out. I mean, I didn't even leave 10%. In my opinion, that was a mistake. And now to the question, how could this mistake have been avoided? I mean, the answer here is very simple. If I had risked, for example, half as much on each trade, then the drawdowns would have also been lower, and I would have worried much less. And accordingly, if I had also had some additional interesting sideways strategy, or for example, the same, what are they called, grid bot that collects sideways movement, then this strategy could have compensated for the drawdown that occurred while waiting for black swans, and then it would have been easier to sit through this trade as well. And so I'm counting on the fact that I'll be able to catch the next black swan with a more interesting position size. And it turns out that right now options have already jumped in the moment, reflecting a sudden shift in market sentiment. That is, you can clearly see the change. If you remember, I said that just recently. During that specific period that was happening, we were witnessing the lowest weekly volatility of all time. Now, however, the landscape has shifted dramatically, and the market is reacting with much more intensity than we saw before. And we clearly just touched this value at the lowest weekly volatility, and this spike occurred. And notice that this year, all three spikes happened unexpectedly. That is, there was low volatility, and it shot up. Accordingly, the second one was, it turns out in, let's see, at the end of May, beginning of June. So we were just sitting there at 30%, and bam, it shot up. And there was another one right in February. Also, notice that volatility was sitting low, and then it shot up sharply. So from this, we can conclude once again that 90% of black swans happen unexpectedly. So if you, for example, are waiting for some news and are planning to buy options on that news, and everyone accordingly is waiting for this news along with you, then most likely a black swan as such will not happen there. Because if everyone already knows that they need to buy options, then there is no element of surprise here for some major player or someone who could plan such an action. And I think you understand yourself that if there were 3.5 billion in liquidations, then it is absolutely certain that someone, well, planned this in advance. Because, well, it looked like a movement that was just set in motion and that was it. It didn't stop. I mean, they just skimmed all the cream off the top and dragged every single bear they could into it. And it turns out that's why there's no option to miss black swans. So if you're buying options for a major volatility spike, it's best to buy them regularly and not miss any. Because the chances of me guessing that last week specifically would be like that were, well, basically zero. I mean, maybe, of course, someone's super intuition told them so, but in reality, after such a long sideways trend, I, on the contrary, thought that the stagnation might continue for another month. So those are roughly the conclusions from this year as well. Now let's take a look at, for example, the weekly charts and accordingly see what the backtester is showing right now, for instance. By the way, I copied the weekly charts and added them to the backtester. And look, for example, at the next week. That is why, in many ways, the black swan is also a strategy for the patient. So right now, there are no cheap options, for example, for growth anymore. And so, for example, even if we take the most profitable option according to the backtester, which turns out to be the 80-second call, notice that in reality, at these prices since 2021, you would have been stuck in a sideways trend. And, well, to say that, one would want to invest in such a strategy, I wouldn't say so, because it turns out that since 2024, this strategy has been losing money and hasn't even reached a new high yet. So right now, it turns out that the prices are no longer favorable. And when we will have such an opportunity again, like the one we had last week, well, it's unknown. I mean, maybe it will take 2 months, maybe 3 months, maybe 4 months. Therefore, right now, even if you buy swans, you should buy a small amount of something far out. Well, I mean, for example, in case some really terrible crisis happens. So for example, I would take something like the 86s and going down, well, actually, the situation on the downside isn't that bad right now. I mean, if we look at the 69,500 put options, it's clear that the maximum was just recently updated there. I mean, we have reached the point now where the fear and greed index has entered the greed zone again. I mean, this hasn't happened for a very long time. Pay attention to how long the market has been there. Here we have the green zone, which as far as I remember is maximum fear. Here, accordingly, is just fear. Yellow is neutral, red is accordingly greed. It turns out we haven't been in the greed zone since October 13th, 2025. Well, there was a small spike at one point, but I think we can disregard that. And now it's August, so it's been practically a year. So for almost a year, we were in the fear zone, and now we've entered the greed zone. What about the market now? So if we take a closer look at the daily chart, usually if we assume that some major institutional player was actively accumulating their position right here in this extended sideways range, and honestly, I believe that is quite a strong possibility, but then you might be asking yourself, why would they do that? Well, let's break down the logic behind this specific market behavior, because when consolidation goes on for so long, and this was probably one of the longest, narrowest consolidations, usually someone major enters during such consolidations. Then why exactly does consolidation happen? Well, it's because major players usually accumulate positions using limit orders. Meaning they place an order, someone gets filled, they place an order, someone gets filled, they place an order, someone gets filled. So they aren't pushing the market themselves, they are simply collecting everything that falls from above. And why does such a sharp movement happen? Because at the moment, when the market has funneled all the available supply into these limit orders, then accordingly, when it starts to rise, a void forms right here. And what is a void? It means that someone is buying, and there's no one really selling there, because everyone who wanted to sell has already done so here. I think you remember perfectly well how much negative news there was. That is, people were saying that everything was bad there, the Middle East and so on. And that's exactly why in my recent videos, I found it interesting that Bitcoin wasn't falling on bad news. And that's precisely why, for the most part, I was looking upwards. And also notice how cool the market is psychologically structured, that it was just last week that I started thinking that maybe it would fall after all. And that's why I didn't take closer calls and further puts like I had been doing before, but instead I took an equal amount of both. That is, I took them for the same range, so it turns out I had the 67s, and accordingly I also had the 59ths. So before this, I was always taking calls a bit closer, but this time I took them at the same distance. And this is exactly that case where psychologically most people don't want to buy during a rally. And well, how this happens, how big players mislead the crowd, I don't know. I even felt it inside myself. Last week I thought that everything would probably fall, but in the end everything went up. So if we assume that a major player was buying here, then there's an important point. For a major player to enter and exit, they need time, they need liquidity, and therefore most likely they won't be exiting on this spike. So why? Because if they start selling everything back now, then most likely we will see a move. Well, I think the market will easily drop below these lows, flying down to somewhere around 55. Therefore, I think it's unlikely that whoever orchestrated this will start dumping right at this moment. I mean, anything is possible, so just in case, I would hold on to some super cheap, I don't know, 58 options right here. But right now, I'm counting more on this breakout signaling the continuation of some kind of movement. Naturally, after such a sharp spike, it's highly likely that the market has a good chance of just hovering here for a bit, and then, for example, continuing its movement further. Because if, for example, it flies further now to somewhere around 91, then I think that most likely there will be a very strong correction after that, and we'll have to wait a long time until this overbought condition is bought off, removed. Therefore, I believe that right now there's a higher chance of some kind of sideways movement in the range of 72 to 77. And accordingly, later on, one can look for other options or look on some 4-hour chart for a pullback to the moving averages and trade from the moving averages accordingly to the long side. So that's it regarding options. There is one more important point I wanted to clarify. So let's say right now you missed this train and you still want to participate in the movement somehow. So if we take the implied volatility data again, what can we see here? You can see that, weekly options have grown from 26 volatility to, it turns out, 45, so almost doubled. So it's clear that it's expensive. If we take monthly options, then it's visible here that they grew from 33 to 40. So here it's already much less. It turns out to be about 25%. So right now, yes, somewhere around 25%. If we take quarterly options, it's even less here. So here it turns out it was 37 and it became 41. So here it's already somewhere in the range of 12%. And the semi-annual options, of course, grew the least. So the semi-annual options grew only from 42 to, it turns out, 42.7. So here it's only 5%. And therefore, for example, if you miss the train on, say, weekly ones, but you expect that volatility might spike now, then it's quite possible to buy some amount of semi-annual ones, because they really, the further the expiration date, the more the options lag behind. And you can see on the chart, that is on a short-term scale, of course, you can see a super movement. If we take, for example, a monthly one, then here, in fact, we are still in a sideways trend. So if we look, we entered a wide sideways range of 80 to 60 at the beginning of February. And now we are at the upper boundary of this wide sideways range, which is right around 80. And if we rely on my favorite moving averages, which here on the monthly chart show that there might be a reversal, it would be better to open the data for the entire history. And here it was, by the way. There. Here you can see these moving averages, the data for the entire history. Now we will remove the unnecessary parts. Yes, and you see that Bitcoin has traditionally fallen to this moving average. It turns out that, here, he probably also fell to it in 2011. It's just that back then there wasn't enough data to draw it. Accordingly, in 2013 he fell, stayed there, a new cycle. He fell in 2017, grew, fell again, hit it. There are actually two moving averages here, the 34th monthly and the 55th. It grew again. It turns out that in 2022 it even pierced the lower one. Here it stayed at 16 for a bit, then returned and grew again. And right now we are back at this moving average. By the way, notice that here February, March, April and May it stayed put. In the end they tried to break through it and we are returning above it again. So if I were trading spot, and I don't really trade spot, I trade options more, then perhaps this signal, I really love this signal, when it hits the moving average on a very large scale. And right now, you see, it's breaking out. So if it breaks out here, I don't rule out that it could indeed reach up to 150, especially if it's supported by a strong decline in the dollar. Therefore, friends, some optimism is appearing right now. I'm counting on the moving average to hold, but just in case, I would still hold on to some monthly options, very far out ones, like the 40s or 45s in case of some terrible crisis, because they will most likely cost pennies. But at least you'll sleep soundly if all of a sudden, a month like the one we had in June 2022 comes along, when we drop by, 37%, or say in November 18, when we dropped by 37%. We've had those kinds of situations before. Well, by the way, when the FTX exchange went bankrupt, at that moment it also dropped by about 25%, but in the end it turned out to be 16. And it turns out there was also a drop of 35% in May of 21. That is, right now, for example, some options below 50 for a month will be very cheap, but then again, once every 2 or 3 years, they will trigger and you will have a good profit. These are just some current thoughts on the market. And accordingly, let's sum up the results of the experiment. So what's the result? It turns out that I started the experiment, I mentioned it on YouTube right around January. So back then, this public account was at roughly the level of 100. Well, if we take January 4th, 100 and 800. So, in essence, somewhere around 100. There were only, pay attention, yes, here, by the way, there were some small trades like that. So looking back at this first trade, it was actually quite a bit smoother. And 1, 2, 3 strong jumps. So just 3 trades provided all of this 50% profit. So it all closes at plus 50, 5,200 approximately. By the way, for the last trade, pay attention to how I exited it. I mean, I was so starved for profit that I placed a bunch of orders. So I had a little bit of sell orders at 210, a little bit at 510, a little at 810, and a little at 1,110. So I set up the orders in a ladder so that if it moves, at least something gets executed somewhere. And actually, I had orders set all the way up to 6,000. But even a trader with 20 years of experience sometimes, runs out of patience. So when the market was at 2,910, I accordingly took those orders that were set higher at 3,200, 3,500, 3,800. They were set all the way up to 6,000. I canceled them and just closed the trade because, I was just tired. Yeah, but at the same time, I'm satisfied with the result. I mean, the most important thing is that I managed to conduct this experiment. I conducted it, I published videos in advance, I talked about the trades in advance. So nothing was done in hindsight. That is, all the trades you saw were announced beforehand. And fortunately, there is proof of this. And if you want to learn the Black Swan strategy, you can just watch all the videos I've filmed since January of this year, and you'll see how the money was primarily earned not through some super intelligence or some super strategy, but mainly through patience. I mean, I endured it. It was painful, especially painful right here when I had to wait for 4.5 months. After that, this patience was rewarded. It's the same thing here. It was painful for me. I slid down from 133 to 123, and this went on for 2.5 months. Patience was rewarded here too. And so, as Jesse Livermore used to say, in the markets, patience is truly rewarded, and often patience and discipline bring greater results than some kind of super intelligence itself. I've often noticed that people who are, say, scientists coming into the market, or those who consider themselves very smart, they are the ones who can't make money precisely because they lack patience and discipline, and they think they are smarter than the market. So I hope that my strategy will help someone else make money. Someone will surely like it because it really requires very little time. That is, if you buy options once a week, you still have 5 or 6 days left to do whatever else you need to do. Well, naturally here, you also need to know how to exit a trade properly. So my analysis shows that in all 3 trades, I could have made, at least 2 or 3 times more. And then the result for the year would have been, I think around 100, maybe 130%. But history doesn't know the subjunctive mood. So at the moment, what I have is already very cool, because considering Bitcoin's dynamics and how it has behaved since the beginning of the year, most people who have some crypto portfolios are accordingly in the red, because Bitcoin is still down since the start of the year. And with options, as you can see, if you compare it to a buy and hold strategy, you can get a much better result. Anyway, that's how things are, friends. I'm thinking now if there was anything else I wanted to tell you. Yes, I probably wanted to say that I am temporarily suspending weekly reviews, because another piece of advice is that after good trades, it is advisable to, at least take a couple or 3 weeks off or significantly reduce your position size. Because my experience from previous years shows that very often, when I made a good profit in the market, I would consistently give back 20 to 40% just out of overconfidence. And that's why a rule emerged. If there's a good trade, you need to take a break for a while. Accordingly, I think I'll be without reviews for at least a month. Perhaps I will film some videos, what is called evergreen, that is educational ones, on options with breakdowns of other strategies. But specifically regarding trades, for now, I want to take some kind of break. And thank you, friends, to everyone who watched my experiment up to this point. I am especially happy for those who followed the trades and were also able to earn something. This is especially valuable to me because I know how hard it is in general to make money in trading. And I get very sad when some instructors say that here, everything is very easy. Here, as one of the books is titled, blood, tears, and sweat. I mean, there's no other way to put it, because that patience, while your deposit is sliding down, it, well, requires a lot of endurance. And accordingly, if you have a desire to continue contact or something else, you can write in the comments, get in touch. I'd be happy to chat. And I was glad for everyone who was with me on this journey. Thank you, friends. Perhaps until we meet again on the Opsionomica channel or in an evergreen video, and I would be grateful, as usual, if you support it with a like, a comment, or I'll be happy to answer any of your questions in the comments to this video. This was Roman Mosidowski, and until next time, bye.